Mr. Bansal, I'll start off with what do you expect the RBI could do in terms of rate cuts for this quarter? You think it will be a 25 basis point? Could it be more or no action?
Although there is no much headroom available with the Reserve Bank of India because inflation is still not in the comfort zone, but still I expect the 25% basis point cut in the repo rate will happen to give a booster dose to the economy and to the investors' confidence.
And maybe also to liquidity. How pronounced are liquidity concerns right now after remaining very tight for some time now, Mr. Bansal?
You must have observed during the last fortnight of the March, the liquidity was huge in deficit, about 1,80,000 crore. But from the last 2-3 days, it has come down to 80,000 crore. And going forward, if the government of India, now this money is flowing into the system as the government of India started spending money. And from the last 3 days, the deficit has come down to 80,000 crore, which is very close to plus minus 1% of the Reserve Bank of India comfort zone. I expect once it comes to 60,000 crore, then Reserve Bank of India will not be unduly worried about the liquidity because all banks are holding about 3% excess SLR. They can go to the repo window and borrow. So I don't expect any cut in CRR immediate.
You have decided, Mr. Bansal, to restructure loans. How much and which sectors are these assets in?
During the last quarter, we have restructured about 3,500 crore assets, of which 1,600 crore is the Air India. Rajasthan is about 1,400 and 300 is about Haryana, because Haryana, major portion of the restructuring has taken place during the last quarter.
What about loan growth, Mr. Bansal, for the next few quarters? How does it look to you?
We are expecting that about 16 to 17% growth will take place in this loan book in the different segments. And this growth will come in three ways. Number one, there will be some drawdowns from the existing projects which are already going on. There will be new sanctions and some retail loans will also take place. So overall growth we are expecting about 17% next year.
Okay, and one final word really, Mr. Bansal, the net interest margin outlook for the next few quarters. Do you see scope of improvement as the interest rate cycle turns around? You just mentioned a 25 basis point cut.
You are aware that now the interest rates are already picked up and now the interest rate will start falling. And in fact, we have already taken a decision to cut our base rate effective from the 10th of April. Going forward, what we feel is if the interest rate starts falling, then we'll get the benefit and the net interest margin will improve. As on date, our net interest margin for December was 2.83. We expect October onwards, it will be healthy net interest margin above 3%.